KPIT Tech says this, for example, right, that they are helping car companies being software leaders, but that is because they are not able to help themselves in some sense, right? That's not KPIT saying, but I'm saying this. So, yeah, I never know. Would you?
Apple car, Samsung car, yeah, why
Apple
not?
shelved that project, unfortunately, for themselves. But yeah, but you are absolutely right, Tamanna.
Yeah, they shelved their project, and then now you have a Xiaomi which has, started putting on its EVs at a discount to Tesla.
Yeah.
So that's where that Chinese story. Just one word on gold. What is happening with gold? Up about 9% just this month, hit a record high once again. I think US gold futures at 2270 rates. So gold is another interesting story. I don't know if that's what that's telling you about the market. So for those who are watching and wondering what equities are going to look like, you're probably going to see a bit of weakness today.
Yeah, and one of the things could well be crude, Tamanna, you rightly put it. One, we are having this Middle Eastern issues only getting amplified and world data on demand starting to look a bit stronger, which effectively augurs well for crude. Hitherto, there was a demand issue. It may well still remain because demand may not really go back go bonkers per se. But if demand picks up a little bit, you hit the nail on the head. Crude would well be the defining thing in a very near term. Let's see what shapes up there. But yeah, I mean, just taking a cue from what Tamanna has laid out in terms of the setup for the globe, the implied open just for a minute before we move to what the trade setup for the day could look like. So the implied open, on expected lines, you would argue, a bit lower in trade. Now, if you just look at independent of what happened to the globe, if you just look at what our indices have done, they're kind of inching towards that greed zone, if you will, with global cues being sedate today. So the perfect recipe for a kind of muted outing in the session. And this is despite private banks showing zeal. So the good part for the market is that the private banks are showing zeal. Even HDFC Bank is participating. Yesterday, if you looked at the list of the stocks which by weightage lent to the Nifty gain, HDFC Bank was right up there, So you're starting to see some bit of traction in this one yet again. And if this continues along with the private banks, that's a bit of a crutch then the market can sit on. And that's yesterday's weightage-led movers and HDFC Bank right up there with the kind of gains that it linked in. And yesterday, Frank, by the way, this chart is very good because yesterday, you saw the economy-linked stocks. Me and Tamanna were talking about it in the closing show yesterday. Everything linked to economy. So you had metals, you had Adani Ports, Adani Power, you had Larsen & Toubro, you had HDFC Bank. Everything linked to the economy did really well in trade yesterday, large caps, and could well continue doing well in the session today. I don't know how you think about it.
I think it was more of everything except maybe autos. Your reality, your media.
Yeah.
It was a different mood yesterday. So,
yeah.
But yeah, you're absolutely right. The economy push is
the heavyweights
in the heavy hitters. Absolutely.
Heavy hitters, that kind of stood out. And it could be interesting. By the way, it's the key movers of yesterday, some very interesting names there. So PNB Housing up 20%. Very interesting to see what the technical experts have to say about that today. Indostar Capital up 5% with some serious buyers out there still waiting to buy. Indus Towers had a massive move yesterday on that CLSA note maybe. Tata Steel, Adani Ports. So clutch of stocks. And because there are a lot of newsmakers today, the show will be tight-packed for talking about all the newsmakers as well as yesterday's movers, Tamanna.
Yeah.
And I dare say, just before we get to specific stocks, Telecom could be interesting because I see conflicting notes there. For some people, Bharti's active subscriber addition is a great thing. For some people, overall addition except for Jio remains muted. So difficult to say which way the cookie will crumble, if you will, on whether Airtel gets a benefit today of doubt, or do we see some bit of correction in Airtel, Vodafone Idea, etc. Small pocket, but could be interesting.
Yeah. No, we'll get to specific stocks. Just quickly wanted to go through the fund flow numbers before we do that. FPIs actually turned sellers yesterday after 3 trading sessions. DIs were still buying, so FIs were not really participating per se in what you saw in the markets yesterday. 522 crores, 1208 on DIIs. But I think the big story perhaps that you will see, and that theme that you will see, is on auto stocks, and we'll just pull up a clutch on them. Most of the numbers are out, and if I were to put it in, say, 2 or 3 headlines, so to speak, I would say two-wheelers on the road to recovery, passenger vehicle sales decent, but export figures have been a bit tepid for most of these companies. Tractor sales have definitely not been great. I'll just, let's see if we can run. I picked up a note from MK on them, which sort of puts it together and what you should look out for. So their top picks are TVSL and Escorts. For MK, they say CVs are potentially poised for a down cycle. So that's one to look at, and volume trends were largely a mixed bag. The CV weakness is going to be the big story. We're going to be hearing from Shashank Srivastava of Maruti a little ahead on the show on their numbers as well. So stay tuned for that. Aditya Birla Fashion is the other, I think, stock to watch, which might have a bit of flow today. They're going to demerge their Madura Fashion and Lifestyle. This was something that was being speculated by the market for a bit. So just for some context, Madura Fashion has 4 key brands which contribute 44% to their total revenue, and those are on your screen right now. So that includes Louis Philippe, Van Heusen, Alan Solly, and Peter England. The demerger ostensibly is to allow, your ABFRL to focus on pantaloons and other digital and luxury brands, etc. But we'll have to wait and see how the street responds to it, what real value unlocking you're going to see for investors in this case. We did a small comparison with Trent, and we can just pull that up. Sesha will have a detailed story on that ahead as well, where compared to Trent, the stock price of ABFRL was about 6.2% down. The MCAP is also more for Trent than ABFRL. Just one more on the radar and sort of related to auto, but not really, is Uno Minda. I'm not sure how negative this news will be, but definitely something to keep in mind. So they've received a communication from 2 key customers, Honda and Scooter India, on a global recall they had to do. The global recall was because there was leakage of oil from the engine, and that leakage was because of one specific part that Uno Minda makes. And they make that in their Bawal, Haryana factory. So it's a sealing plug cone or some such. And my colleague Puneet from our research team, pulled out more details on that, so the company has insurance, of course, for any product recall, but this segment is roughly 26% of revenues for Uno Minda. So that's one that perhaps I will watch. But there's so much on the list today, Niraj.
Yeah, but this is interesting. A large customer like Honda Motorcycle and Scooter saying that they have had to recall because of Uno Minda supplying on that, because of the issue with an Uno Minda part supply. That's the sealing plug, as they've said, is interesting. I don't know how large is Honda Motorcycle and Scooter for Uno Minda as a client, but it's certainly interesting. So yes, take on board that. May see a negative reaction, so watch out for that one. Couple of updates that have come in. So firstly, CSB Bank, the Q4 update, they reported a total deposit of 29,719 crores, which is a 21% uptick YOY. And the gross advance is also up about 17.91%. So both deposit growth and advance growth actually looks pretty decent for CSB Bank. Remember, they have a large gold loan business as well, with Manappuram, Muthoot, etc. having done what they have done as stocks. CSB Bank hasn't quite done that. Could these results be one of the key triggers that drives the performance? So could be interesting to watch CSB Bank today. So from a newsmaker perspective, that stands out. Watch out for JTL Industries. JTL was up 9% yesterday, by the way. We got the update at 4:30, but clearly somebody knew something, because their annual sales volumes, they reported post-market hours, highest ever annual sales volumes, 341,846 metric tons versus 240, which is a 42% uptick. It therefore, by math, comes out to be a decent number for Q4 as well. So watch out for JTL Industries, could be interesting, and a clutch of brokerage notes. But before we get to brokerage notes, I dare say do watch out for the cooling solution companies. IMD yesterday said that extreme heat waves are likely in coming months. So we've known that some of these Voltas, Blue Star, Symphonies have done well thus far in anticipation of this. But extreme heat waves is not something that we've heard an official statement. And this might just spur the sentiment on some of these companies. So watch out for these stocks as well in the session today. The Symphonies of the world. 1 month hasn't done anything. The last 10 days or 50 days, some of these stocks have moved. Maybe there could be more in store. So watch out for these as well. But a clutch of brokerage, I mean, I don't know if you're missing some other stocks, but a lot of stocks will react on brokerages as well, Tamanna.
Yeah. No, just a couple, and I don't know if you'll see much of a reaction, but I read a business update I found interesting. Loans sanctioned were up 14% year on year, while their loan book outstanding was 27%. So figures aren't bad. What Harsh from our research team says is that perhaps the growth figure could have been higher. So I doubt we're going to see a negative stock reaction. I don't know. I'm curious to see if an Indigo or SpiceJet will react at all to what's happening with Vistara in two ways. One is loss of any market share for one player could be an advantage to another. But also, on the other side, the problems that Vistara is facing is endemic to the industry right now. So it's not going to be about just one player. So that's something I would watch. In brokerage notes, Niraj, I thought the MS one on India property was interesting because look at what's happening with property right now. And this is exactly what I was asking Hemang Jani on the show yesterday when he said property looks good before an election. And I was curious about that because typically it's the opposite. And that's what MS is saying. They estimate a slower, next 2 quarters to be slower because RERA approvals will be held up due to the elections. You're going to have a change of government, not just at the center, but in several states as well. They expect companies to guide 10 to 20% Y growth versus 30 to 40% earlier. So you're going to see a drop over there. They've downgraded DLF. They expect their Q4 FY24 pre-sales to disappoint. They've upgraded Godrej Properties with a price target of 2,500, equal weight on Macrotech. Overweight on Prestige. Prestige is interesting because that was, the stock of the day yesterday. Let's just pull up Prestige very quickly. Target price of 1,400 is what they have given. So you're not that far off. And underweight on Oberoi Realty. So that was one note that I thought was interesting today as far as a hot sector is concerned. Yeah,
most certainly. And speaking of hot sectors, Citi came out with a largely blanket avoid, if you will, on IT. But the one that stood out for me from amongst all the others, they've downgraded a clutch of names, including the target prices on TCS, for example. The one that stood out was Emphasis. So the Citi on Emphasis note, a Citi note on Emphasis has a sell. The target price reduced to 2,255 versus a current market versus the earlier target of 2,515 and the current price of 2,461. So they have a sell with that target price lowered. They have revised the FY24 to 26 earnings estimates by 0 to 4% to incorporate changes in operational parameters. And they assign a multiple of 24 times versus 26 times earlier, given concerns around the pace of demand recovery. So clearly, everybody's talking about this. Nomura today has a note which is talking about very cautious commentary possible from IT majors in this quarter. So watch out. While IT had a uptick yesterday, and we spoke about it, global markets plus HCL Tech plus Infosys. Today may be the reverse. By the way, Infosys seems to have gotten some IT demand as well. So 2 days on a trot. Who knows? It's a small one.
But the taxman said, "Okay, what has happened? We're going to be giving money. Let's fix
we can't do that. Yeah. So let's take a small chunk out there. But it's interesting. This is jokes, by the way. I mean, I'm sure they follow their processes. But it's an interesting one. So watch out for IT today. But watch out for Adani Ports today. Yesterday was amongst the best performers. Citi has given out a note saying it's their top pick. They've raised the target price to 1,758, which, based on the current market price, is a 27% uptick. Now, why do they say so? Of course, they've opened a positive catalyst watch on the earnings on Adani Ports as well. Why do they say so? They say that they expect Adani Ports to report strong volume, revenue, and EBITDA growth. The strong volume growth should lead to a core port EBITDA growth of 29%. At a point of time when everybody was talking about how the global economy doesn't look that great, etc., here's a port company beating its volume guidance and likely to score a 29% EBITDA growth, which is pretty stunning. And they say that the valuations leave ample room for upside given the quality and the scale of the underlying business. And they, of course, increase their EPS estimates, etc. Standard disclosure, of course, that Adani Ports is a part of the Adani Group, and the Adani Group owns NDTV, and you're watching NDTV Profit. But that takes nothing away from the note that is written by Citi, And it also begs to question about the pace of global recovery that everybody's talking about. If a port company, which is largely dependent on global and local growth, is actually clocking in the kind of numbers, it'll be very interesting to see what JSW Infra numbers or Gujarat Pipavav port numbers look like as well. So watch out for that. And a clutch of other brokerage calls. Now, we made a table of this. Data patterns, HAL, Lao Pala, Saregama, Aditya Birla Cap. I mean, just look at the brokerages and the buy calls and the target prices. So data patterns, Jeffries has a buy call, a target price of 3545. HAL, a buy call, target price of 1300. Lao Pala by BNK is a buy call, the target price is 462, which I think is some 30-40% upside to the current market price. Saregama, a buy call, target price of 441. Aditya Birla Capital, Tamanna was speaking about Aditya Birla Fashion. Aditya Birla Capital has a buy call on Macquarie, or rather outperform from Macquarie, a target price of 230. Just the nature of brokerage calls today is very, very wide, Tamanna.
Very wide. Just add Citi on Zydus, which has a sell target with a price target of 650, down from its 750 earlier. And while they expect improvement in base business margins, but higher sales of GE Rev Limited seems to be the issue. So Zydus maybe. Lots more coming up though. Lots more coming up on brokerage notes. But should we go across to editor's cut, or you?
Yeah, just one small segment, Tamanna. And what's one piece? This is something that our colleague Chinmay pulled out from the NSE report that they come out every year. And the net inflows by retail investors in the cash segment. Now, we know that generally the numbers have been good, but look at this data. It's stunning to say the least, because 2023, the numbers came off, and came off quite rapidly, right? So 5,200 crores, this is NSE official data, we have nothing to do with it. From 2022 numbers of 88,000 crores. So 2023 was a disappointment. The first 2 months of 2024, we've seen a number of 6,000 crores already.
In the cash segment.
In the cash segment. So,
do you think they're moving from derivatives?
Yeah, I mean, well, it is certainly a question that we should try and
look
figure
at that
out.
volume there and compare, because either a lot of new people have come in to pump in fresh money, but then that should show in your SIP inflows as well.
Yes.
Or there is a bit of idea that, okay, if you burnt your fingers in the F&O market last year,
and therefore, so clearly, that could well be right, that 2020 was a year of derivatives. So the cash market only 5,200 crores.
Correct.
But 2 months of FY24 is 61,000 crores. The whole of 2022 was 88,000 crores. That's the kind of participation that we're seeing from retail right now in the cash markets right now. Pretty interesting.
Astonishing. Absolutely.
Okay, editor's cut. And it's an interesting data to an interesting conversation, Alex. I presume it's around autos.
Absolutely. You're absolutely right. In fact, as our viewers will probably know, the first and the second of the month is when you generally get a sense of the wholesale data for auto companies in India. But they don't necessarily give you a breakdown of the individual segments. Still, there's quite a lot that you can glean from that. Remember, March was the data that we're talking about, and therefore you get a picture for the whole of FY24. Harsh, we're still waiting for some key data. Bajaj Auto, I think, is imminent. But then you've got a sense of quite a few of these sectors. Let's start with two-wheelers, and then let's progress through the others as well.
Well, yes. So, Alex, on the two-wheeler front, March slightly weak is how one can sum it up. But overall, FY24 has been heartening because it's been a bit of a beat overall for the full year. But March slightly on the weaker side. Less than expected. It's possibly also something to do with the electric two-wheeler side of things, because your subsidies are going to go away from April, and therefore the offtake there was slightly weaker. On the retail side of things, of course, strong numbers, but when you're looking at the OEM or the manufacturers selling to retailers, that number was a bit softer on the March side. In fact, it saw a bit of a decline as well. So,
and Hero was significantly below expectations. I think the expectation was for a positive number in the month gone by in March, but they reported a decline in sales volume.
Yes. So, in fact, if we can have those numbers, Hero, in fact, was on your screen. 543,000 roughly was the estimate. It's come in at just about 490,000. So, around your 10% off versus your estimate. So, yes, Hero probably leading the trend there. TVS was slightly better, but it saw growth of 12% and thereby better. But outside of that, it was still below expectations as well. Oisha, choose to believe that till it's range bound, till it doesn't hit the 80,000 kind of mark in a sustainable kind of way. It's currently at roughly 76,000. Till it doesn't hit that 80,000 kind of number in a sustainable manner, a re-rating, a significant re-rating is not something that one can
We'll have to
for.
Also consider the appetite of new launches that they have in the offing.
Yes.
Let's talk about PVs as well, because Maruti Suzuki, not too much to speak of, and SUVs continue to be the story to track.
Yes, absolutely. SUVs continues to be extremely strong. 31% continues to be the kind of market share that SUVs it's holding up at a fairly high base. So that's a fairly good kind of a number. But where overall PV is concerned, also not a bad set. The base has gotten reset, it's gotten higher. So FY25, from that perspective, would be interesting to look for, because the growth number likely should be lower given the higher base of FY24. So PV is definitely the bright spot in the entire auto space, no doubt about that.
And we'll have to see how the EV segment within that also starts ramping up. Of course,
yes.
We have a management conversation with Maruti Suzuki lined up for you, and I believe there is going to be a chat about what their strategy on EV is. But let's also talk about the CV side, and I think I will add tractors into this as well. What's the picture there? For tractors in particular, it's a little miserable.
Yes. So I'll choose to have two separate conversations there. One on the CV side of things, weak set of numbers, that seems to persist. And the expectation is that it should persist even into FY25. Of course, you have some commentary where Tata Motors is suggesting that Q2 FY25 onwards, possibly you could start seeing a pickup in CV. But overall, analysts still seem to be quite soft in terms of their outlook on CV going into FY25 and for FY25. So that's the outlook on the CV side of things. On the tractor side of things, things could be slightly different. It could depend on monsoons, it could depend on rabi crop, it could depend on... So there are several factors which will
But as
determine...
of now, it's not looking good.
No, not looking good at all for tractors either. Of course, seasonality also coming into play a little bit. Also, the early festive season also could possibly is possibly also playing out.
So to me, Harsh, what seems to be the big takeaway as things stand is that rural consumption is a bit of a question mark at this point, because generally you would associate your motorcycle sales and read Hero MotoCorp in this and tractor sales, which is by definition something that's driven by rural, and both of those are languishing. That seems to be the takeaway for me. Is that something that you concur with?
Yeah, absolutely. So I do believe that rural is possibly a bit of a drag at the moment, and a rural pickup could see a good pickup both on the tractor side of things as well as on the two-wheeler side of things. At the moment, as I said, PV being the bright spot, but outside of that, for two-wheeler and your tractors to really pick up, you will require rural to start to participate.
All right. So on that note, let us know what you think about the numbers and whether or not you're enthused in any particular segment. As Harsh has pointed out, PV continuing to be the bright spot. There's more to talk about before the start of trade. Do stay tuned. Lots more coming up on NDTV Profit.
All right, back with India Market Open right here on NDTV Profit. Pull up the implied open and show you what we are likely to do this morning. Likely to start off on a sedate note. The question is that how we will stay for the day or can we do better? Now, this is the time when we get you option strategies. Usually our colleague Agam does it. Today Tamanna and me have volunteered to do this piece, and let's get in Ajit Rambia, who's the founder and CEO of Ajira Ventures, to talk about some of those option strategies. Ajit, good morning. Thanks so much for joining in. This is Niraj here. Good morning. And
good morning, Niraj.
And before we get to the option strategies, Ajit, just a quick check. Are you constructive for today and the rest of the week, or do you believe the markets could be sideways to maybe even down?
Markets are volatile, Niraj. We believe up to the elections, the scenario, like yesterday we closed at high, and today the SGX is showing 100 points downtick. So these times markets will be volatile. We have a bullish bias though, but they will be volatile.
In fact, that implied open is showing mild weakness and maybe global factors, etc. as well. Hi, Ajit. Good morning. Tamanna here. Wanted to know what would be your strategy on the Nifty and the Bank Nifty today? What would you advise our viewers?
Speaking about the indices, we have a resistance for Nifty at around 22,530 levels, which is the recent top, and the support is placed at 22,300 levels. For Bank Nifty, we have the resistance at 47,800 levels, and the support is well placed at 47,300 levels. Though the market will remain volatile, we may see a downtake, and then again buying will come. It will like that.
Okay. With that in mind, Ajit, what are your option strategies for the day? Let's start with the first one.
Yeah, we like IRCTC. So IRCTC has given a good breakout, and the counter could see new highs in the coming weeks. So we suggest a bull call spread for this counter, where we buy one call of 980 at rupees 30 and sell one call of 1030 at 13 rupees 50 paise. So the investment for this strategy is just 16 rupees 50 paise to capture a possible gain of 50 rupees.
Could you just explain this, Ajit, for our viewers? So what is it that you're doing and why is it that you're doing this?
So we are bullish on this counter, IRCTC. It has given a fresh breakout. So we are buying at the money calls and selling our target calls. So we remain bullish at 980 levels by buying a call at the money, and we reduce our cost by selling a 1030 call at 13 rupees 50 paise. So our cost remains at 16 rupees 50 paise. That's the maximum that we can lose, and we feel that this counter will cross 1030, so we can gain the full 50 rupees.
Okay, so you're constructive. You're just reducing your cost by selling that April 1030 call, but right. In order to reduce your cost, but otherwise the outcome of this, or rather the thesis of this, is that you're constructive on IRCTC as a counter.
Right.
Got it.
So we are bullish on this counter. Yeah, right.
What about the other call that you have, Ajit, on PNB? What is your strategy there?
Yeah, so we are again bullish on PNB. After a very good consolidation, it is now ready for a limited up move. So we initiate a bullish butterfly strategy in it, whereby we buy one April call of 125 at 5 rupees 10 paise. We sell two calls, April calls of 130 at 2 rupees 95 paise, and again buy one call, hedge it, of 135 rupees at 1 rupees 60 paise. So the cost of this strategy is near 80 paise, which is its maximum loss possible. And you can earn 5 rupees if it closes at its target price of 130.
Ajit, I'm curious, why is this called a bullish butterfly strategy? Can you explain that?
Yeah, so we are bullish on, there's a limited space for PNB to go up as we feel. So we buy one ATM call, sell two calls of 130, which is our target price. And again, hedge. So we are one short as we buy one and sell two. So we hedge it with buying 135 call. So everything is covered, and the maximum loss that we can incur is just 80 paise.
Okay. The other thing, Ajit, is on some of the stocks that did really well yesterday, just a follow-up there, and just trying to get a sense of, is there a strategy that you may have? So, a couple of names from the derivative space which had a fabulous outing, Indus Towers and Adani Ports.
Adani Ports and
Indus Tower.
Indus Tower. So Indus Tower is making new highs these days. I don't have the charts right now, but it is a real good counter and we are bullish on it.
Okay.
Yeah.
Fair call. Ajit, we'll leave it at that. Thank you so much for taking the time out and giving us that perspective. Really appreciate your time. So that's the view on some of the option strategies. No, appreciate your time, Ajit. And pretty interesting.
Yeah.
I was wondering if you'll bring up an auto name because autos have been the buzzword, right, the last few days.
Absolutely. Autos have been the buzzword. Their annual sales numbers is giving a clear picture of, what the reality is. And while it's largely positive, the fact is, in the overview, it's a bit of a mixed bag. One of the leaders, definitely in the passenger vehicle section, is Maruti. The stock has been in focus because it crossed the 12,000 mark. Now, that's seeming like an old story if you look at what's happening with Maruti now. Just about a couple of weeks ago, we were celebrating the 12K mark. It's at 12,595. Now, my colleague at NDTV, Mugdha Mishra, caught up with Shashank Srivastav of Maruti to speak to him about the sales numbers for this year, for the whole of last year, and of course the quarter. Listen in.
Yeah, so multiple of factors, there's no one factor, but multiple factors. First of all, the economy did really well. And as you know, there is a very high correlation between economic growth and the fortunes of the auto industry. So it's been, in that sense, very good overall economy. We saw some really good capex expenditure by the government, especially in the rural infrastructure and so on, which also is related and has a multiplier effect on the demand for automobiles. Third, we saw, as Maruti Suzuki specifically, we introduced the 4 SUVs, and that impacted our sales very positively because SUV is now the biggest driving force for growth in the industry. 26-27% growth for the SUV sector, whereas the overall growth in the industry is around 8.5%.
You spoke about rural. So what has rural growth been for Maruti, and how do you see it panning out from here on?
So rural has been very positive. In fact, this year, the growth is around 11.2%. That compares favorably with urban growth, which is around 7.2%. And in fact, rural, our overall contribution of rural sales in our total portfolio now is around 45%. So that's pretty large. For the industry overall also, it is it's grown to about 33-35%. So rural has been doing well. Apart from those capex expenditure on infrastructure that I spoke of, it has been a normal monsoon. Although at the beginning of the year, we were a little afraid that the El Nino will probably reduce the monsoon as such. But it came out to be roughly the average, long-term average was pretty close to that. Kharif sowing was pretty good. Rabi sowing going on is very positive. So I think that has affected positively the sentiment, and we do hope that in the future the rural sale will continue to show a positive progress.
And what about your urban? What is the expectation from rural and urban growth for 2025?
Yeah, so pretty much similar. We do expect rural growth to continue, especially if you have a normal monsoon. Of course, it is dependent on monsoon because that affects agricultural income in a big way, and that affects the sentiments quite disproportionately. So, and as you know, car buying is a discretionary purchase, so sentiments are very important. So we do expect rural growth to continue to be in the positive territory.
Earlier it was assumed that rural and small car segment are closely related. But since rural has shown growth, but the small car segment is still struggling, do you see the income in the rural areas have shown significant growth?
Yeah, absolutely. In fact, if you look at the data from 2007 onwards, the rural growth I'm talking about auto industry has been higher than urban growth in all years except one, which was, I think, 2012. Otherwise, it's been always on the higher side compared with the urban growth. And largely because the rural incomes have been rising faster than urban incomes. Also, as I mentioned about the infrastructure getting better, so sentiments are quite positive. So yes, these are the factors which have helped rural become so big now in the auto.
Now, let's talk about WagonR has been one of the most successful products, and that's mainly because of commercial vehicle usage, the taxi usage. Now, what is the segmentation between personal vehicle buying and commercial vehicle buying, and what is the trend there?
Yeah, so you mentioned about the higher commercial usage. Actually, that's not true so much anymore. WagonR is the number one vehicle in the industry. In fact, for the last few years, is the only brand which is selling in the industry more than 200,000, sold more than 200,000 this fiscal year which just ended. There is a lot of personal buying in WagonR. In fact, the proportion is quite high. Earlier, people used to feel that since CNG is also an option available in the WagonR and it's a significant portion of the sale, people used to think that it's largely commercial which takes. It's not true anymore. In fact, if you see cities like Bombay, Pune, Mumbai, Pune, where the penetration of CNG in WagonR is like 70-75%. But it is largely the individual buyer which is using it. Of course, there are commercial vehicle sales as well. So that trend for usage of CNG vehicles for personal buyer has actually been increasing over the years, and it's quite substantial now.
All right, so that was Shashank Srivastav talking about the growth story coming up ahead. But the other big story today is that the aviation space. Passengers were left stranded after a large group of Vistara pilots went on mass sick leave. The pilots were asked to sign up to a new pay structure. We have Aditya joining us with the latest and, in fact, exclusive sources on the story. Aditya, a very good morning. Now, as I understand it, the issue or the genesis of the issue is because the Tatas are trying to bring parity between what happens with Air India pilots and staff and crew and Vistara staff and crew. So that is where this entire problem began, isn't it?
Yes, Tamanna, you're absolutely right. So the pay parity which Tata Group is trying to bring between among their airlines, the Air India, Air Asia and the Vistara. So the pay parity rule has basically resulted into an email that was sent earlier this month to the pilots of Vistara, asking them to sign a new pay structure of 40 fixed hours per month. And this was done because the airline wanted to bring the pay structure in line with the other carriers of the group, and pilots were asked to sign this pay structure by March 15th. And because they were asked to sign this pay structure by March 15th, the pilots have gone on a massive sick leave because of a massive reduction in the pay from 70 hours to 40 fixed hours every month. And the pilots were, although offered a sum of rupees 3.5 lakhs for the first officers and a sum of rupees 4.5 lakhs for the captains for signing this new pay structure. However, the pilots have decided to go on a mass sick leave, and we are gathering from our sources that nearly 20 to 25 pilots from the Delhi base itself have gone on a sick leave, resulting into the massive disruptions for the airline, and airline has been facing the operational issues since then.
Absolutely. In fact, we'll get a report from my colleague Maitri. She's at the Mumbai airport right now, capturing what's happening there with passengers. Thank you so much for all of those exclusive details, Aditya, there. Talking about that story. Ajay Attorney is now joining us. He's editor live from alounge.com. Very good morning, Ajay. I hope you haven't been caught in a Vistara flight in the last 24 hours, because I know you're constantly traveling. But, my question to you, and also from a perspective of our viewers who might be wanting to know what the stock impact is, if any, is this advantage for the others in the fray, and Indigo and a Spice?
Hi, Tamanna. So luckily, I wasn't caught up in one of these flights which got delayed. But I think this is one of those issues that arises at all airlines from time to time. This has happened at Indigo. This has happened in the past at other carriers as well. So it's a passing storm. It will pass. And I think hopefully the pilots and the Vistara management are able to sit across the table and hash it out between themselves. But I don't think this is a significant up move for one of the other carriers. I mean, Indigo will always be ready to, absorb any pilots which are available in the market because it's the same A320 fleet for both of them. But so far, we haven't heard of any such moves being made in the market so far.
Yeah. Just a sense of whether the issue is endemic. Essentially, you have a huge growth in the aviation sector right now, more and more passengers, but a fight for the same pool of talent and pilots. You saw that a few months ago with another private carrier where they actually took their pilots to court who did the same thing. They went on mass leave and then they quit and they joined a rival. Do you think that that's an issue that is eventually going to hit everyone, or do you think an Indigo, for example, will be immune?
See, this issue is more about a discontent between the pilots and the management, and perhaps rightfully so, because anyone would feel bad when their pay is going to be, revised downwards, and that too substantially. I mean, during COVID it happened, and then pilots were discontent, but they were happy at least they had a job at that point of time. So now they are coming from a position of strength because like you said, the pilot pool is limited. The opportunities are many for them. And I think the only thing that holds them back is the fact that there is this DGCA rule of a long notice period. So perhaps these pilots want to go to the merged Air India, but time will tell if there will be a resolution to this. Other airlines, like I said, have seen this issue in the past. There will, in India, apart from Air India, there's no union for crew members. So these kind of things happen from time to time. And unfortunately, passengers get caught up in it, but eventually they solve for themselves.
Okay. Ajay, much appreciate, and we'll leave it at that. Thank you so much for taking the time out and giving us this perspective. I'm glad, like you said, not caught in any of these flight mishaps, so good for you. But thanks for joining in and giving us that perspective. In fact, our colleague, Maitri Sheth, is joining us from the Mumbai airport with a ground report of what's happening there with regards to this issue. Maitri.
Flight cancellation and delays by Vistara are not ending, and what we have got to know just now is around 12 to 15 flights have already been cancelled from Mumbai itself for today, destinations both domestic and international. This has happened after Vistara cancelled around 50 flights yesterday, and so far around over 200 flights have already been cancelled by the airlines. This has come after pilots called in sick en masse. After a few days after the airlines company has said that had asked the pilots to sign up for the revised salary norm and working norms. According to the working norms, pilots need to show up for 15 days in a month to be eligible for 40 hours of flight time, which according to them is quite lower than what they were getting before. This has created a lot of concerns, and passengers are also concerned. Not a lot of communication is actually possible at this point of time, and also it is advised to the passengers to kindly track the status of their flights before leaving for their destinations.
Okay, Maitri, thanks. That's an early morning thing out there for Maitri, but hopefully some of the passengers are okay. The question though, as the reason why we've done all of this is to try and understand, of course, there is a consumer issue out here, but there's also an investment angle to this. And that is what we bring in with Niraj, Head of Equity Research at Latin Malharal. Niraj, good morning. Thanks for joining in. Indigo was facing challenges. There was a lot of talk around how Vistara Air India combined is gaining market share. Could it dampen the spirits, etc.? Do setbacks like this strengthen the case for an Indigo or maybe even a SpiceJet stock?
Yeah, good morning and thank you for having me on your show. Definitely, I think this is a very unfortunate incident as far as the passengers are concerned and the entire industry is concerned. At this point of time, I think this can be viewed as a pressure tactic by the pilots to basically extract the demands. And of course, the entire industry has been tarnished because of this unfortunate development. But we have to understand one thing, that such things do happen when we have seen an exponential booming of the aviation industry. We are seeing a huge amount of strain on the overall infrastructure, where we have airports which are constantly crowded. There is a huge amount of pressure on the ground staff. On the entire infrastructure, I think it looks completely strained. We have a shortage of parking space, etc. It's a huge number of infrastructural issues which still need to be addressed, considering the fact that this industry is on an exponential growth curve. So I think it reflects very poorly on the entire industry. There is a very little chance of any poaching happening at this point of time as far as the pilots are concerned. So hopefully, I think this issue should get resolved, and especially this is in light of the fact that we've seen such good numbers. The amount of passengers which are being handled by the airports. I think I was just going through the Delhi report where they've handled close to 6.5 crore passengers handled during the 11-month period. At the same time, Hyderabad has handled close to around 2.6 crore passengers. So it's a huge amount of traffic which is being handled. It's definitely going to create some amount of strain and tension. And I think hopefully this should get resolved.
Okay. Well, let's see. Does it materially move the needle for Indigos and the Spice Jets or no? But so that's the fundamental call. Now let's get in a techno-funda perspective, if you will, for the first time on NDTV Profit. And after a long time, we're talking to him as well. Rajat Bose joins in with his thoughts on markets and other things. Rajat, great having you. Thank you so much for taking the time. I really appreciate this. Good morning to you. Niraj here with me is Tamanna. And Rajat, just wanted to understand, how are you seeing this last few days of an up move into the market? As much as people were talking about there being higher valuations and a scare of all of that, the market seems to be climbing the wall of worry.
Well, Niraj and Tamanna, very good morning to both of you, as well as thank you for having me. Thank you for letting me come on NDTV Profit. What I find about the market, let me just put things in perspective. I would be quite brief, but still certain things have to be mentioned. See, one thing, this is a one-way traffic for most of the time. Whenever you see a correction, that correction is very small, short-lived, and then sharp upswings are happening. This is primarily because there is a lot of money that is coming into the market. And because of that, although there are stocks that are trading at 90p, that are trading even in the triple-digit PE multiples, but yet those stocks are also being bought. There is a different thing that is happening. That is, we have seen that because of this money influx into the market, the asset prices are going up, and they will continue to go up so long as this money supply is there into the market. Unless there is a huge... See, what we learned from reading books like Kindleberger and all, it is that at a certain point of time, IPOs, QIPs and all that comes, and then there is a big correction. Such kind of big corrections are not happening for the simple reason that the money supply continues to be there. Now, under such circumstances, what you should do? There is a big problem that has been already tracked down by SEBI. That is, mid caps and small caps may face liquidity problem at the time when people try to liquidate their positions. But that is the reason why I would say that this upswing is going to continue, but you should be mostly concentrated now on quality stocks, large cap stocks, where you have got good liquidity. And say today I would be talking about a little bit of a correction that I'm expecting, but it is not that a reversal signal is there and all that. The reversal signal simply can't happen because there are, over the last 20 years, we have seen that those who have not participated in the stock market have lost out. So you have willy-nilly no choice but to come here and buy. So that is the thing that is happening. So long as the money supply continues, Niraj, you would definitely appreciate that. You see, look at the Fed balance sheet. Maybe 20% of what it was during the COVID period, the bonds, $9 trillion worth of bonds. Now it is maybe 6.5 or something. But still, there is a lot of money. And Jerome Powell has already said that next there would be an interest rate cut or something.
Right.
So whether inflation comes back or not, that's a different issue altogether. But as of now, asset price inflation will continue. If you say that, what should one do? As I said, that now it's time that you should be mostly focused on quality stocks. Coming to today's...
Rajat, it's such a pleasure to hear you after a while. But what I think viewers would really be keen to know from you is, and let me get to the brass tacks, especially on
Tamanna,
the Nifty.
can you speak a little louder?
Can you not hear me, Rajat? Is that better? Is that better?
It's somewhat better. Yeah,
okay.
Yeah, now it is better.
Okay. So I think what viewers would really want to know from you, Rajat, and I was complimenting you, saying that it's great to speak to you after so long, is what is the kind of levels you see on the Nifty and Bank Nifty? Nifty tested 22,500 yesterday briefly, couldn't hold on. Do you think there's enough steam there?
See, first I would talk about the Nifty primarily because this is actually encompassing the whole market. Nifty needs to take out 22,525 to 22,530. If you look at March and April, there had been a number of tops around that level. First, it was 22,516, then there had been 22,517, and then 22,524, 25,526, and yesterday it was almost 22,530. So this level needs to be taken. But there is something that bothers me today is that almost 8:1 advance decline ratio. Whenever you see such kind of ratios, this ratio goes up to that level, there is some kind of a correction. And that correction can happen for another reason. There is likely to be a bullish crossover between the 9-day EMA, which is at 22,181, and the 20-day EMA, which is at 22,201 as at the end of yesterday's close. Now, this is a bullish thing, but I have seen that before it gives its effect, there is a minor correction that happens. In that kind of a correction, what you should be looking at, you should first look at whether it falls below 22,393. If it does fall below 22,393, then there is a possibility that it may come down to something like 22,300 or maybe 22,250 kind of level. But these two moving averages would not be breached. That's what I tend to think. And on the way up, after today, I'm expecting some kind of a correction. But after that, there would be a run. And the next target would be 22,735, which is a very critical Fibonacci level. It needs to be taken out. But some of you would be knowing that I have been telling in my, maybe Niraj would be knowing, that is, I've been giving a target of 24,100 to about 24,150 for this upswing. After that, there would be, whatever reason, I don't know, whatever reason, going forward, from there, we would see a significant correction, just as we saw in October 21 to about June 2020. June 22. So now, to talk about say the Bank Nifty.
Rajat, you'll have to allow us. We need to slip into a break right now.
Okay,
so
sure.
We'll come back from a break.
Sorry.
No problem. We'll come back from a break, continue our conversation with you and Niraj. We also have to take Rajat Bo's stock ideas and also ask Niraj about some of the newsmakers. Stay tuned, viewers. We'll be right back.
Welcome back. We're just about 30 odd seconds from pre-open rates and the first pre-open rates to hit. We are likely to see a bit of a soft start today in the markets. Maybe some profit booking after yesterday's roaring run of the day. Global factors have also not been very, very positive. But we're speaking today with Rajat Bose and Niraj Vasher, and we'll continue this conversation. Rajat, just before we move ahead, very quickly, what are your top picks for the day?
Well, my top picks are Brokerage properties. I would say that you buy it, your stop loss should be below 22.69, and on the upside, the targets will be 24.59, 25.40, and 26.25. This is a short-term call. And the other one that I've chosen is the HDFC Bank. Put a stop loss below 14.47 and keep a target of 15.10 and 15.25. It's a short-term upswing because of a shorter pattern in HDFC Bank. But as I said, I only expect a short-term upswing in HDFC Bank.
Okay, just keep with those graphics because both these stocks, viewers, have a fundamental connotation which we'll ask Niraj Vasher about. For HDFC Bank, from one of the brokerages, we've gotten this note which says that when the FI ownership data for HDFC will be out in a few days, if the FI ownership is down about 4% in March shareholding, there is a possibility of MSCI weights going up and triggering inflows of about 2 billion into the stock. Maybe one of the reasons why the stock was up 1.5% in trade yesterday. So that is the first one. And the other idea that Rajat Bose had, let's get Godrej Properties. Tamanna highlighted this in the trade setup, viewers, that the Morgan Stanley note on Godrej on real estate has a large uptick on Godrej Properties.
2,500.
2,500 target
They've gone
price.
overweight with a price target of 2,500. So MS is also fundamentally positive on Godrej Properties in a note which is otherwise not very positive on real estate, at least for the next 2 quarters. That's because of election cycle, etc. So that's interesting. Just let's pull up a few of those pre-open rates and see what's popping in those first few minutes. My eyes now on ABFRL. They're going to be demerging their Maruti Fashions unit, and that's 10% up this morning. A lot of auto stocks are responding. TVS Motors, I can see, about 2.5% up right now on the rates that I'm watching. Yeah, there you are. Prestige, which again was doing very well. But apart from that, even your Nifty stocks and M&M and all of those counters, those auto counters, and iSure I saw was doing fairly well. Yeah, about 3% up. Tata Motors, around 1.5% up. So you might see some action, early days yet because it's just the first few minutes, but you might see some action in the first few seconds of trade, and this might be something you want to watch out for. Hero Motor, not that great. Hero Motor, though, overall, some of the best numbers in the two-wheeler segment as well, but that stock showing a bit of weakness on opening trade right now. Nirav, let me come to you on, where would your bet be right now? Would you look at the auto pack at all, or would you stay away after all the movement that we've seen in the last couple of trading sessions?
Yeah, I think there's been quite a sharp run-up as far as the auto sector is concerned. So I think we expect the auto sector to take a kind of a breather in the days to come. We've seen some very good movement in the passenger vehicle makers. We've seen good movement in Maruti, Eicher Motors. Two-wheeler makers have also done quite well. We've seen a good move in Bajaj Auto and Hero MotoCorp. So I think broadly we would like to stay away from autos for the time being.
Stay away from autos. What about metals? We should pull up what some of those metal counters are doing this morning. I want to see what Hindustan Copper is doing, Tata Steel, JSW Steel. All of them had seen a lot of excitement yesterday, largely on the China factor. Cooled off today, at least as of now. Nirav, any positive view on metals at this point?
Yes, because one, we have the China factor, and secondly, I think the commentary from the steel majors during the previous quarter, they said that there's nothing to complain as far as the domestic markets, the domestic demand is concerned. The domestic demand continues to be very, very robust. It is the overseas markets, that is the Europe and US, which have been doing slightly badly, and there is a muted demand over there. Those markets continue to be under pressure. But on account of that factor, we've seen some imports which were increasing in the domestic markets, the fear of dumping, etc. But now I think with the global scenario also improving, I think it's a win-win situation as far as the metal industry is concerned. Plus, of course, the China factor is also positive. And the third important factor for the entire industry is the consolidation which we have seen in the metal sector. I think all players have achieved a certain size and scale, and they are scaling up operations also. And there is a lot of pricing discipline which is there in the industry. Of course, now we've seen that iron ore prices also beginning to cool off. They're at a low. So I think it's a win-win situation as far as the metal industry is concerned, and that will reflect in the numbers, in the quarterly numbers, which are to be announced soon.
Your top picks here, though, Nirav, in metals?
I think we like Tata Steel, we like JSW Steel, and Jindal Steel and Power.
Rajat, on the charts, anything that you'd pick on metals?
I think NMDC Steel and Hindustan Copper, they are very good bets for the short to medium term. In fact, metals, minerals, these kind of stocks will do well going forward. So keep an eye on them. There will be lots of opportunities.
Okay, before we get to Harsh though, this is big news for Tata Technologies. Tata Technologies and BMW have signed a contract. The JV with BMW aims to establish automotive hubs in Pune, Bengaluru, and I think Chennai. It's an agreement with BMW Holdings Netherlands. Now, I presume this is for ER&D services, presumably for BMW worldwide. This is a big deal. There is a downgrade that has come in on Tata Technologies today. It is not a cheap stock, but this agreement is a big deal. It's a 50% agreement with Tata Tech and BMW. Remember, we've seen ER&D companies do this. KPIT Tech executed something like this with Renault and Google being in a JV. I'm not saying it's the same, but there is some semblance of this happening, wherein an auto company is joining hands with a software company in order to bring out the best of both worlds into a single business. And this is obviously being done by multiple auto companies worldwide in order to take on the competition that, as Tamanna was saying on the trade setup today, coming in from the tech companies / telecom companies, because they are turning auto.
Very soon, I think auto companies and OEMs are also going to become tech companies.
Or take help of.
Or either way. Also for Tata Tech, I think it's an important one, because the only problem, or the only, I would say, headwind for them was too much of concentration on their one largest client. And this sort of perhaps evens out those risk factors. And of course, it's a big deal. BMW is a big deal. And that means at some point, perhaps some of that technology might be available in India as well for larger parts. It would be great to have a conversation with them and understand where this goes.
Yes.
So hopefully we can get Tata Tech on. Yeah.
This is big. And just just keep an eye out for ER&D stocks and whether KPIT Tech actually reacts a bit negatively to this or no. The pre-open rates too early, maybe 9:15 we'll get to know, but it is Tata Technologies which is in focus, and I think post 9:15 there'll be interest there. Harsh, sorry to keep you waiting, but just one more stock that I want to mark before I get to Harsh, and that is Aditya Birla Fashion, something that Tamanna spoke about on trade setup again. The stock is up 10% in the pre-open session on the Madura Lifestyle demerger. So watch out for that. We'll talk to Niraj about it. But first, let me go to my colleague Harsh, who is joining in with the top brokerage calls. Harsh, we'll have to make it quick, lack of time. But what are the key brokerage notes today?
Well, yes, first off, City on Adani Ports, 90-day positive catalyst is what they've opened up as a positive catalyst watch. They're expecting strong volumes. Now, mind you, it's a double beat with regard to expectations on the volumes front. despite a revised volume guidance as well, that's also been beaten by Adani Ports. What they're expecting is core EBITDA to grow by 29%, consolidated EBITDA to grow by 27% in FY24. Q4 expected to be a strong quarter, a beat of sorts. They've revised their guidance upwards for FY24, 25, 26 on both EBITDA as well as EPS, and by quite a bit, 20%, 18%, 16% on EPS for FY24, 25 and 26. They're valuing Adani Ports now at 1758, a 28% upside to yesterday's close. They believe valuations are reasonable at this point. Quickly moving on, Jefferies on both aero and defense. Within that note, you have data patterns, in particular 40% upside given by Jefferies on this one. They are expecting revenues to rise 5 times all the way through FY30. Indigenization as well as export to benefit the company. They're expecting ROE and reducing working capital intensity to be the drivers. Risks, of course, being some management bandwidth as well as obsolescence of tech. But outside of that, very positive on the overall aero and defense space as well. Jefferies.
Okay, well, and that's a 7% uptick on data patterns, so pretty strong note there. And that stock is up and about, but Adani Ports too, after 2.5% uptick, is up another 1%. So watch out for both of these names. Just so many stocks to talk about. Okay, we'll have to play a bit of a rapid fire with Rajat and Nirav for the next few minutes. And then we'll get into details post-market open. But we just have 4 minutes to market open. So playing a bit of a rapid fire here. Rajat, to you first. Adani Ports, 1.5% up today, up 2% yesterday. Is there more in store?
Yeah, Adani Ports is going to go up, and it is going to cross 1400, and thereafter it can even move up further. It is on an uptrend in the short term. So if you are buying into it, then put a stop loss below 1350, and it is going to do well.
Got it. Okay, Rajat, thanks for that. Nirav, again, a quick question to you. You would have looked at the announcement of Tata Technologies. Is this a big deal or is it too expensive a stock?
I think sentimentally it's going to be a positive as far as the stock is concerned, but we have to see the broad contours of the deal. But I think definitely it's a turning point as far as the stock is concerned.
Turning point as far as the stock is concerned. There's a big statement from Niraj on Tata Technologies. Now, data patterns is the third one. Or maybe Aditya Birla Fashion. Let's try and talk about that because that's up 10%. Yeah. Maybe you don't get a chance to buy. So maybe I can ask Rajat about it, but I can ask Nirav about it. This Madura Lifestyle demerger, Niraj. Would you be tempted to buy into Aditya Birla Fashion and retail?
No, not at the moment, because I think this stock has really been a disappointment, at least as far as the last 1 year is concerned. And I'd like to study what kind of deal they want to work out, because they want to separate all the divisions, which will have a different capital structure, capital requirements, etc. So I think would require more detail on the plans going forward.
Yeah, I'm liking this rapid fire round, Niraj. This is a good idea. We should do this every day. I have a couple, and this one is for Rajat. IREDA. Good business update. Stock is up in pre-open session. Do you like IREDA at all? Do you track it?
IREDA.
Not too much data because it's a relatively recent listing, so not too much on the charts, but otherwise.
Only when IREDA moves above, say, 150, then you can expect it to scale up to something like 160. Unless 160 is taken out, there would not be any sustained upswing.
You know, another one I want to look at this morning and look at what it's sort of settled at the pre-open session is PNB Housing. PNB Housing got a huge booster in terms of its credit ratings. It had a positive note, a little, tepid in the pre-open session. Nirav, do you like PNB Housing?
Definitely, yes, because there's been a marked improvement in the asset quality. I think the gross NPAs have gone down from around 8% to close to around 2%. So I think this is one factor, and the business per se also we expect improvement because housing itself has been doing quite well. Realty has been doing quite well. So I think definitely this will reflect on the housing finance companies also. So they should also do that. So PNB in particular should do well.
Okay. 1 minute left. Rajat, just one quick word on the other one. Indostar Capital, have you had a chance to look at it at all? Was up 5% yesterday, very likely will be up today.
I couldn't hear you.
Indostar Capital, Indostar Finance. Have you looked at that stock at all, Rajat?
No, I don't track it.
Okay, fair call.
I can't find it right now.
No problem. Understandable, but 5% up today as well. Remember, yesterday was up 5% on very low volumes and a lot of buyers. So, Rajat, 20 seconds. If I had to ask you for one top stock today, which one would that be?
One top stock today would be, I would say that you go for Adani Ports. Adani Ports is going to go up, and because it is the port in our country now, it has beaten Navaseva, and its uptrend has got so much of strength. Last 7 sessions, all green candles, so it is going to go up, and one should continue to remain in it, and one can buy a fresh as well.
Rajat, coming to you post-market open, but here's how we are starting off this morning. In the green for sure, rather in the green for specific stocks, but I must say, you could almost argue that this is in the green because the implied open was showing a lot lower. I think there's some positive news flow for the markets at large. Bring up the mid caps and the small caps maybe, because those indices might be interesting. In the green for the mid caps, small cap was up 2.5% yesterday. Marginally in the green. Okay, so not in the green, but kind of flattish, but that's not a bad start. Let's get the heat map up and see what specific stocks are doing. Even Stevens, which is the first thing. Now let's talk about the gainers. Adani Port, Rajat Bose's top recommendation, is the top gainer as well today. 1.77% higher. For viewers are wondering why. Amongst other things, Citi has a brokerage, Citi has a note out there. The target price is 27% higher than the closing price yesterday. Bajaj Auto on those sales numbers, 1.3%. There is strength in NTPC, ONGC, BPCL, Power Grid. Again, PSUs and economy-linked stocks, much like yesterday, are doing well. The quantum of red is slightly increasing as opposed to the quantum of green maybe, but still, there are some decent movers. L&T margining in the green after the kind of move that it had yesterday. Again, a stock on which Citi has put out a positive note. What is not doing well? Apollo Hospitals, 1% lower. There is a weakness in Wipro, in Fee. So IT is sluggish, if you will. Reliance is sluggish, maybe. ICICI Bank is slightly sluggish. So while yesterday was a big day for private banks, in today's session, even HDFC Bank and ICICI Bank are just kind of a bit sedate. But Tamanna, you have to say, for all the sedate news at the global end, we are doing fairly okay. And Adani Ports and Bajaj Auto are not complaining.
Early minutes in trade, but definitely better than what was expected. I think Bajaj Auto sales numbers have surprised on the upside from the first cut that we can see. Definitely better than expected. That's the input that we're getting. So Bajaj Auto doing fine. I just quickly want to pull up how your broader markets are doing, the indices, before we get to the specific stocks, and just get a sense of where the broader markets are compared to the Nifty and the Sensex. Definitely more positive, and that's a trend that continues from yesterday, about nearly 0.5% up on the small cap 250, both in the green. The mid cap index also in the green. So you're seeing a bit more sort of a positive sentiment there. Let's look at ABFRL. That is the stock of the morning. They're demerging Madura and Madura Fashions, which has 4 big brands. So we'll look at what ABFRL is doing this morning. 10% up, like pre-open. So you know that circuit is continuing for the stock. IREDA is the other one that was on our radar. It was one of the stocks that we talked about on the trade setup as well. Up about 5% now. It's the business updates which are being seen as positive for IREDA. Adani Ports is something that Niraj spoke about. A couple of things over here. The business updates actually was the first trigger. Then you've had a Citi note, which has also been positive. Tata Tech and Ono Minda, stocks which have been in news. Tata Tech came in just a few minutes before opening trade with that BMW deal that they have signed. So that's a big story. They've talked about it today. Ono Minda is something that we pointed out, and you're seeing a bit of a negative trend. So 2 of their big customers, including Honda, have had to recall some of their products because of a specific part that Uno Minda has made. They have insurance to cover it, but there is a bit of a sentimental hit that you're seeing this morning. So those are some of the, I think, first cut of movers. But would you say, Niraj, that a bit of a careful play overall?
And that's actually summing it up perfectly. But just want to mark a few stocks aside of the ones that Tamanna has highlighted. And let's see if they're moving around. So Indus Tower had a big move yesterday. Just highlighting a few which did really well in trade yesterday. It's a bit lower in trade today, as is PNB Housing, which is up 20% yesterday. And I think it's not started off in the best possible fashion, a bit quiet, a couple of percentage points lower. Indostar is up 5%, if I'm not wrong. In the pre-open session, at least it was. And let's see if it still is. Yes, up 5%. Madhusudan Kela increasing the stake there. JTL Industries. It reported an annual sales uptick of 42.25% after a 9% uptick yesterday, up another 3% today. CSB Bank, the Q4 update looks strong. I wonder if the stock is reacting duly, up about 3%, so not bad there. And some other brokerage names on which there might be reactions. So Jefferies, the note on data patterns with a target price of 3545, that stock is up 5%. La Opala, BNK has a buy with a target price of 462. Wonder if La Opala is reacting? No, not really. Saregama, again, BNK has a buy with a target price of 441. Wonder if that is reacting? Hardly. And Dollar Industries, Elara Capital has come out with a note saying that it's doing something pretty interesting, up about 3%. Of course, last stock, Aditya Birla Fashion is not the only one. Aditya Birla Capital, Macquarie is an outperform rating, a target price of 230. That stock is up about 3% as well. So not bad going for a clutch of mid caps. Though I must say on the Sensex we are now about 0.2% lower. So the first 5 minutes we've kind of drifted with a marginal downward bias. And Rajat was talking about this. Rajat, a quick reference. You were talking about the possibility of a corrective move today. Where is it that you would go out and take a contra buy call today? At what levels?
The contra buy call could be your Tata Technologies because Tata Technologies is the only stock that was coming down among the ER&D companies. And one thing I would like you to investigate that BMW earlier, or maybe they are still having joint venture or some, not joint venture, kind of sourcing out things from LTTS. And this is the second company they are now tying up with. So is LTTS losing out on this, or it is only a separate deal that needs to be seen? So LTTS actually is showing a bit of a downtick.
Good point there, Rajat. And definitely is Tata Technologies gain at the cost of LTTS is something you're right. We should definitely investigate. But Tata Investments is another one that's had a complete sort of turnaround after several days of drubbing. You've seen second trading session in a row with that stock about 5% up with no real trigger once again, but Tata Investments doing fairly well. Rajat, anything that you would prefer in the auto space at all as per the charts? What do you make of a Maruti?
Well, Maruti can at best go up to say another 500 points. And see, so far as I understand that this auto data that has come yesterday is not very positive. It might affect not just because the rural demand is not so much there. So it could be that tractors as well as stocks like Hindustan Lever might be affected. So one needs to be a bit circumspect about the auto stocks now. Maruti was trying to go up for the last 3 sessions, but it has not been able to manage to do so. So I would be a bit circumspect.
Niraj was talking about Symphony in the opening session, and that stock is doing well, up about 6%. The reason, though, is a bit scary. It's on the back of extreme heat waves predicted. And you're in for a hot summer. The IMD predictions are looking bad. We shouldn't even say anything, Niraj. At least we can sit in an AC studio. Imagine people who can't. But yeah, that's positive for Symphony. Nirav Asher, is this a stock that you track, Symphony?
Yeah, it's an expensive stock, but I think water coolers, basically the space which they are present in, these coolers, I think they have a very strong demand in tier 2, tier 3 centers, especially in the rural areas, because of the affordability element also. So I think this company will continue to do well, not only on account of the domestic demand, but even the export demand is quite strong. So I think definitely this is a stock to look out for. As far as the extreme heat conditions are concerned, we should augur extremely well for this company.
Nirav, if Symphony is expensive, would you venture into a Blue Star or a Voltas because they will benefit out of this as well?
Definitely, I'd like to look at Blue Star because this stock is a stock where we got our coverage also. And apart from the domestic air conditioning, they have a very strong presence in commercial air conditioning. So a lot of metro projects, a lot of hospitals, a lot of malls, etc., where they've got their presence. And the prospects are very, very strong as far as Blue Star is concerned. They've recently done an expansion worth 1,000 crores. So I think the best is yet to come as far as Blue Star is concerned.
Okay, best yet to come as far as Blue Star is concerned. Well, you know, some interesting movers that we're seeing in the session today, and Tamanna highlighted Symphony. She managed to spot it. Pretty strong showing by that one. I was trying to look at some other A group stocks which may have done well. TCNS Brands is up 12%, of course, related to this only, the ABFRL piece. There is Bajaj Consumer, which is up 6%, if I'm not wrong. And KPI Green, a management that we are going to talk to in about 15-20 minutes from now, is up about 5% as well. So do watch out for that too. Rajat Bose, the Symphony, Voltas is up 3% too, by the way, today. So Rajat Bose, Symphony, Voltas, Blue Star, etc. These cooling solution companies, do you like the charts here?
I would prefer Voltas to Symphony because Voltas' chart is much better compared to Symphony. So my choice would be Voltas.
Your choice would be Voltas. Okay, 3.5% higher for Voltas. So do keep an eye out for that as well. Rajat, a lot of conversation around cement companies trying to make a bit of a comeback. Has anything stood out for you, both on the charts or on data that you might have processed? Rajat?
Here, Ambuja and ACC, these two you can look at. And after that, maybe you will have a look at, say, Sri Cement. I don't track Sri Cement so much because its share price is too high for common people.
Okay, okay, that's interesting too. Sri Cement at 26,000. Yeah, not too many people would go out and buy it. You know, it's strange, but people tend to do this, right? No,
but Rajat, why is it too expensive for you? Is what I want to know. Maybe for common people, why are you finding it so expensive?
It may not be expensive for me, but Sri Cement was my biggest faux pas in my investing career. In the year 2000, or I think late 1999, I bought 200 Sri Cement for only 10,400 rupees, and I sold it after it became a 5-bagger, and I still rue the fact.
Yeah. I think a lot of people would be doing that for a Sri Cement, for a Bajaj Finance, for a Motherson Sumi, and countless other stocks. So yeah, Rajat, join the gang. The gang is called everybody. I'm sure of it. Okay, the other one which is doing well, by the way, is JTL Industries, up 6% on that note. And Uflex, I think they've started a plant, if I'm not wrong. And that stock is up about 6% as well. So pretty strong showing for some of those. Okay. Well, gentlemen, I think we'll need to take a break here. So we'll need to thank both Nirav Fashion and Rajat Bose. Nirav, great having you as always. Thanks for taking the time out. And Rajat, fabulous talking to you for the first time on NDTV Profit. Look forward to talking to you more often.
Same here.
All right. That's the view from our two experts. And on the note that the broader markets, just before we hit that break, can we pull up the advanced decline ratio very quickly and just see if the breadth is looking okay. Yesterday was very strong, but the advanced decline ratio, and look at that market breadth, it's not buckling down. 3:1 in favor of the advances on a day when the Nifty is a bit quiet. So the broader markets are telling you a story, and that's what we will do. On the other side of the break, talk to two managements, both from the broader end of the spectrum. One will apprise us of what's happening with metals by and large, and the other one is talking about what's happening within their ecosystem and the kind of order wins that they are doing. Stay tuned, we'll be right back. Back with India Market Open right here on NDTV Profit. Now, metals are a case in point to discuss. The China data that came out, the Chinese PMI data that came out over the weekend, on Sunday in particular, was very constructive. The private Caixin survey, as well as the Chinese official numbers, clocked in metrics which were higher than the previous few months. And if indeed the Chinese recovery or the perceived recovery continues, it could be pretty constructive for metal prices, arguably metal demand. Now, how constructive could this be, if at all? And what would the implications be for Indian manufacturers? Let's get in the perfect voice to put that into perspective. Rajesh Gupta, MD of Lloyd's Metal and Energy, joins us right now on the show. Mr. Gupta, great having you. Good morning. Thanks so much for joining in. Niraj here.
Good morning, Niraj. How are you?
Very, very well. Thank you so much. And I hope the same with you. I'm just trying to understand, what do you make of the recent news flow around Chinese economy, and how would you read into that and the implications on the Indian metal sector?
So, Chinese data coming out, I always believe, is not fully acceptable, at least to me, in many ways. And you never know what to do with it exactly, because the data swings very erratically based on the holidays and things like that. For example, the next 6 days are going to be holidays in China. Incidentally, I was in China for last 5-6 days, and I think I can give you a little bit different approach rather than the data, which I'm sure many of your analysts and viewers already have. I was in a region, or in various regions of China, with visiting various steel plants. And number one, I think the people, there does not seem any unemployment, what we keep hearing about. There does not seem any issues in terms of traffic, in terms of shopping areas, in terms of restaurants or hotels. They're all much busier than what they were, say, 6 months back when I last visited them. I think these anecdotal data help, according to me, a lot in understanding the market. In terms of the PMI data, etc., coming in, definitely the manufacturing cycle is a little bit down than, say, a year back, a little bit better than just before the winter. And again, I think that is also very seasonal as far as China is concerned, because from November to February, they are very, very slow in terms of their manufacturing process because of the weather, because of the holidays, etc. So I believe that the Chinese growth story is still there. When I visited the smaller areas, I still saw a lot of development that would take place, areas which are still quite backward, and I could see highways being built, railway tracks being built all over.
Sure.
So I can see that a lot of growth is still going to happen there.
Got it.
Data-wise, I think you are the expert.
Well, as you said, not too many people are experts on Chinese data, but let me just try and hypothesize then, Mr. Gupta. If indeed the PMI numbers are an indication of what could happen, let's assume that over the next 3 months, the numbers look largely northwards and largely better than what they have been in the last 3 to 6 months. What would the implications be for demand and pricing for Indian manufacturers like yourselves?
So, number one is that the exports spurt that has happened from China in the recent few months will reduce dramatically.
Okay.
Their destocking would have taken place by then anyways, because they have all reduced production. So that spurt of export of steel would reduce, number one. Number two, the spurt is around 2 times last year versus the year before that, is around 50 million to 100 million tons. Number two is when their manufacturing goes up again, then it's also the manufacturing of the downstream products, whether it is cars, whether it is capital goods, and of course infrastructure, what I mentioned earlier. So if their steel making goes up, then the iron ore prices go up. Right now, the Platts index is around $100. It goes, 100 to 110 is swinging in the last 2 months in that region. And I think it'll remain there for the next 1 month or so. But if the PMI index is really true, then the manufacturing goes up and the stocking of iron ore happens. So that will go up, and that will again lead to a little increase in the steel prices, I believe.
A very good morning, Mr. Gupta. This is Tamanna Inamdar here, and great to speak with you. I found your insights on your own impression of China very interesting because, as you say, that data is circumspect. I think another aspect of this, which people are not quite comprehending fully, is not just where Chinese demand is going, but the kind of supply constraints that they're forcing. Maybe not real supply constraints, but then, for example, copper manufacturers trying to cut their output, etc. Is that a concern that you see on the horizon in terms of what that is going to do to your margins and how it's going to impact you?
No, I don't track copper particularly. In steel, they're not constraining. If they cannot sell, they don't produce. They have a lot of trade actions all against them all around the world, so they don't want to export beyond a certain point. So that's why there is constrained manufacturing. In copper, I think it's a demand and supply game. So when there is no demand, people reduce supplies. I mean, there's nothing wrong in that. So that's part of the. I don't think it's constrained at that level by anybody.
And what would your sort of take be on the Chinese recovery story that the world is sort of betting on? Are you seeing the green shoots for that?
So the Chinese recovery story is, is it really gone bad to that extent? When you consider that, year on year. So it's definitely a slower growth than before, and that will continue. Yeah, and I think the growth will be slower over the next few years also. But slower growth in such a big market also big economy also has a lot of impact.
Since we have you here, Mr. Gupta, I just want to get a sense of how you are looking at ending this financial year with all the turbulence we've seen in metal prices and what your outlook is.
So this financial year has been good for us. The turbulence in metal pricing right now, our productions are maximum in iron ore, and going forward we'll be going into steel. But in iron ore, the markets have been pretty good during the year, and we see the same thing for the rest of the year. Most of our most of our markets are in the Indian market, which is a little delinked from the Chinese market in terms of many aspects.
And the demand is looking robust in the Indian market. Do you expect demand to pick up once again post the election season sort of slack is done?
So the last 2 years, demand in steel has been around 13%, if I'm not mistaken, every year. So that's around 32% over 2 years. I don't see 13% coming back this year, but 13% is something that I have not seen in my 40 years of career. So even 8-9% of steel growth is a very good growth. But if the economists are talking about the economic growth remaining at 8%, then I think next year again it will go back to double-digit growth in steel.
Mr. Gupta, I'm wondering, the port data seems to be suggesting that shipments, both cargo as well as containers, are not looking that bad. If indeed infrastructure spends pick up again post the election verdict and real estate cycle being where it is, why are you a little bit skeptical about steel demand?
No, I'm not skeptical. 13% is relative. 13% is something which is, it's in a dream, right? 13% in any commodity growing year on year for 2 years in a row is a dream. That dream cannot continue, I think. And double digits after 25, 26 is, I don't see how I'm skeptical. I'm maybe being more realistic. That's my nature. You know me by now, Niraj. But I'm not skeptical at all. I'm in the steel business. I cannot be. Steel people have to be bullish. That's the nature, right?
Okay, fair call. One last question from mine at least. Based on your assessment of whatever the Chinese data might portray and versus the domestic demand, which you say is slightly different from what happens to China any which ways, how do you see pricing for the rest of the year?
So, if you look at the current year pricing, the markets at a certain level, I think that will be steady for the next 3 months, maybe four months, and then post just around monsoon or just before that they will start. Just around the monsoon time they will start going up. That's my take on the pricing in the steel market. Because the destocking at the stockists at the user place is happening in a very rapid way right now.
All right. Just one last point, Mr. Gupta, on your fundraise plans. You've announced, I think, about 5,000 crores of fundraise versus QIP for CapEx. Is that on track? You're not going to be resorting to debt. Do you have any clarity on how you aim to deploy those funds or anything that you can update there?
So right now we have obtained the board approval and will be going in for the EGM approval for the fundraise. It will be through QIP and maybe partially through promoters' input as well. So that the dilution of the equity is not as dramatic as we want it to be. This fundraise is for our long-term capex projects, which are in the next 6-7 years, like I told Niraj earlier, around 30,000 crore rupees. And it's more from a cautionary view that we are trying for this, that we are going for this fundraise. And we are positive that this will happen. And number one. Number two, no debt. That is a very, very firm mantra in our company, and we will maintain that.
That's a really, interesting outlook and a positive one, I would say. No debt, says Lloyds Metal. Thank you so much, Rajat, for speaking with us today. We're going to take a very short break over here, but we're right back talking about another very hot space, I would say. The management of KPI Green joins us to talk about their outlook on the solar energy play and much more. Stay tuned. Welcome back. You're watching India Market Open. Now, I would say current theme and one which will be recurring for a while is going to be India's focus on hybrid energy, and that includes with a big focus on solar energy as well. The company we're talking about and talking to today is a leader and Surat-based. The stock has been on a roll, definitely, KPI Green. If you pull up the chart of how it's looking in the last 1 year as well, there's definitely been nearly a 300% increase in the last 12 months. So now what's sticking? Quite a few order wins recently has kept the company in news, but what is the outlook on the actual execution of these order wins and the transition that India is attempting. To speak more on that, I'm joined now by Farooq G. Patel. He's a CMD of the KP Group. Mr. Patel, a very good morning, and thank you for speaking with us here at NDTV Profit. Let's begin by talking about some of your latest approvals and orders which have been in the news. 10 megawatts of solar power projects under the IPP segment. You have, some under the CPP segment as well. Can you give us a bit more texture and color on these? How crucial are these projects and what is the execution timeline?
Thank you, Tamanna. And very good morning to you and your listener also.
Thank you.
That we have got the recently RT 2.6 megawatt CPP order in our kitty. Altogether, in this year, we can say in KPI Green, we have already completed 445 megawatt altogether with this. And we have the order in hand today is 1178. Say 1,178 megawatt is still to be execution in pipeline. 10 megawatt IPP. With this IPP, we have completed IPP about say 160 something altogether. So we have the very good bandwidth with the order. We have the very good new order also in our hand. In IPP also we have the order of 240 megawatt DC for the GVNL, 50 megawatt again for the GVNL, what we are trying to energize in this year. So company will in this year, means in 2025 by March, we are trying to do the 500 megawatt IPP altogether. This is our internal goal are setting. And as you know, the hybrid policy is very lucrative from the government. And the of course for that, because of that, we are getting much more order, and we have a very good bandwidth in the we have the very good land and we have very good so the order pipeline is very strong. Execution, of course, the KP team is itself is a very strong team.
Is it largely government, the order book, or your clientele is largely government? And is it state government?
In CPP, of course, in IPP, you can say the government order is very big.
What proportion? What proportion?
90% is a government order in IPP. We have got the one order from the Maharashtra government of 100 megawatt, 100 and 200 megawatt from the GVNL, again 50 megawatt in the hybrid. So altogether, government order in IPP in AC side 350 megawatt.
Okay, and
in AC side.
This is between the Maharashtra and Gujarat governments largely.
Maharashtra and Gujarat government, and already we have energized 100 and almost 60 altogether. We have already energized in IPP in KPI. So you can say we have the very good bandwidth, and when we are talking of the 500 megawatt 2025, the government order are already in hand. In CPP, of course, the CPP is the forte of the private players, and we are doing in CPP as a EPC and getting the annuity income for the 25 years on a lease and the O&M also. So over there we are getting, we have got the very good order over there also. Altogether in KPI, when we talk, it's about as I told you, 1179 megawatt order in our hand. Today, after execution or after say energize the past order.
Okay, and what is your outlook for how much that order book will grow in terms of the size?
See, as a group, I can say that by 2025, as I told you before, 10 gigawatt we are going to plan out. But today we have the order in group is 2200 almost, you can say, is in our hand. We have already energized 1274 as a group in KP Energy and KPI both. So 1274 is already energized and 2192 is in our hand. So altogether 3 gigawatt order with the execution we are having today. For by the end of 2030, 10 gigawatt is our goal, which we are going to achieve in a very near future.
Mr. Patel, good morning. Niraj here. What about execution and how is that shaping up? Are there some bottlenecks there? And if not, and if execution is going as per plan, what are the numbers looking like for FY25 and 26?
Good morning, Niraj ji. We have the very good capacity of the execution. As you know, today the problem is in renewable energy is the execution part. But as you know, we are in this field from last 15 years and we have a very good capacity and the team are very strong. 300 plus engineers and the retired regulatory people and retired so scientists also are there, and the people who were in this field from the big organization, they are already joined and they are joining us. So for us, we are trying to match the bandwidth of the say business with the, of course, with the education team, and without education we cannot reach to the goal. So we are taking care of that point also, Niraj ji, and we have the very good today also the strong team. What we have today is in our hand. We will 100% achieve of this 2200, but we are not going to stop over here. We are going to reach by 2030 10
Most
gigawatt
certainly.
goal with the government goal.
Most certainly. So, Mr. Patel, if that is taken into account, how does it look like in terms of numbers? How much do you execute in FY25? How much do you hope to execute in FY26? And what would that translate into, let's say, on EBITDA for the next 2 years?
See, for the EBITDA, you can say as a group-wise EBITDA is a very strong today. The EBITDA of the group, and if I say the KPI and the KP Energy, as you know, KP Energy last year was 442 was the total top line, and the bottom line was the 43 and the KP I Green was 647 last year I'm talking about.
Yes.
And the December was the 737 last year 23. This year of course we have closed this year on 31st March, but we cannot declare that figure, but you can understand that by 647 in a whole year and 9 months we have achieved the 737. So of course we are trying to go by the 4 figures in the KPI green also, and the PAT also will be very smart in this year. And the EBITDA is say EBITDA is last year was 211. And this year we are trying much better than the last year in the KPI at the same time.
Mr. Patel,
yes,
sorry to cut you, just there is paucity of time, but here's my question. Your trailing 12-month numbers show that you've done very well in FY24. I'm just trying to see what are the targets that you've already declared. I don't want you to violate your silent period, but whatever you've already declared in presentations, what is the expectation for FY25 and 26?
Expectation of the EBITDA is much more than the last year, number one. Number two, it will be trail with the year to year, as you see, Niraj, and very clear that we are growing with the 60% EBITDA, and we will be grow like that, more than that you will expect.
Okay. Well, we wish you all the best for that. Congratulations on all the order wins as well. And thank you for joining us and explaining the business prospects currently, Mr. Patel.
Thank you very much, Niraj ji and Tamanna ji. Thank you very much. So nice of you. Thank you.
Not at all. And well, just want to mention that as we wrap up this leg of India Market Open, the markets are absolutely flat. The Sensex is 0.07% in the red. So hardly a move there, but Tamanna, very strong market breadth, and that's the hallmark of today's trade as well.
Look at the broader markets though, Niraj. Like if you pick up the Nifty mid-cap 100, you have 73 advances to 27 declines. So that is where the action is. So just a few noteworthy sort of names before we get into that break. ABFRL looking like the stock of the morning, up 13% now. A positive flow there. Adani Ports, another one that we highlighted as well, up about 5%. I would say Prestige is the third I would choose. Of course, property or real estate companies are not doing too badly. Godrej Power also decent this morning, as is Voltas and Symphony. That still for me is the big highlight this morning.
Beautiful music, a great symphony.
No. Such heat that we are going to be facing, climate change, and of course we all have to suffer it. You may as well make something of it if you have investments in these two stocks. With that, it's a wrap on India Market Open, but stay tuned. We will be joined by Piper Serica's Abhay Agarwal next on Talking Point.
Thanks for tuning into Talking Point. I'm your host, Niraj Shah. The case for a chat today, well, you can't not talk about metals, especially after the Chinese data that has come out. So, and the fact that the global growth is looking okay. So our rising port volumes, I'm using that as an analogy, a hint of improving or healthy global macros. That's the first point on our radar today. Metals, will they rise higher on stronger Chinese growth numbers? And the Chinese PMI number, is that a lead indicator for that? I think that's the second question that we'll ask our guest. In addition, to talk about how would consumption volumes pivot? Will they move higher, staples, or will it continue to be confined to premium consumption? Our guest today is Abhay Agarwal, founder of Piper Serica. Abhay, great having you. Thanks for taking the time out. I hope all is well.
Yeah, thank you so much, Niraj. As always, a pleasure to be, on the show talking to you.
The pleasure is entirely ours, Abhay. I assure you that. Let's start off, Abhay, with maybe wondering if the world has gotten it wrong in the first quarter about what will happen to growth for the rest of the year. US data not looking too bad. Europe, I was reading a Gavical research note which spoke about how the Europe data is not looking all that bad in the last couple of releases. China PMI data that came out was also looking better than otherwise. And we know that India is looking okay. So some of the large pockets, are they turning at the margin? And what would that mean for risk assets like equities?
I think we have been tracking China, especially Niraj, for last 6 months for a couple of reasons. One is that whenever China local consumption gets into distress, we have seen that the Chinese large manufacturers try to get into cash by dumping at cost or below cost their products, and that creates a deflationary cycle unintended globally. And I think Indian companies, a lot of them in chemical space, agrochemical, metals, have suffered because of that over the last 6 months. But whatever research we did, we also started seeing over the last quarter, starting January onwards, that that dumping has ceased and stopped being a problem. And the pricing power was coming back in a lot of categories, especially bulk drugs, metals, chemicals, agrochemicals. So I think the data coming out now of China of PMI increase and to be followed by better domestic consumption, cleaning up of the real estate exuberance, if I may say that. I think that is all my guess. I'm happy to make a bet that is behind us now. So all the pain that the Chinese economy, Chinese domestic consumption, Chinese exporters had to go through are largely behind them, and now we will see Chinese economy recover. The good thing about the Chinese economy is that it's not so dependent on foreign flows, unlike India, where for our capex and capital formation is still dependent on international global flows. China is not. It has a lot of domestic capital. So I think China will grow this year and grow at a level that will surprise the analysts, probably driven by domestic consumption. And this will lead, as you said, your bigger question, will the global growth outlook will be better than estimated? My bet is yes, it would, because I don't see any reasons of, the consumption falling off, interest rates are going to trend down. And when that happens, consumption goes up, the macros continue to improve, especially for India. So I don't want to be sanguine or careless, but I would bet that the global growth, global macros will improve from here on.
Okay, so 2 investing implications, and I'm coming to that before I come to the macro again, Abhay. The first one, let's talk about the Chinese data since you're tracking it so closely. Usually, China growth is associated with a cyclical uptick in metals. Do you see that happening?
Yeah, I think that is a natural outcome, Niraj, because there is a limited supply of metals that comes into the global markets, and the Chinese exporters have been the largest ones there, and they have had no pricing power because they have to keep the factories running, and that puts pressure across the board. In a down cycle we saw last year, where global consumption of metals didn't fall off the cliff, but at the same time it wasn't growing in a manner that people were used to. And on the same side, you have supply coming in continuously. I think that is going to even out. And the natural implication will be that the commodity prices, especially metals, will firm up from here on. However, I don't think it will be a very sharp uptake. It could happen in some commodities because we don't really track the exact monthly demand and supply data. But barring some, I think there will be gradual recovery. So if anybody is going to make a bet about sharp recovery in metal prices, I think they would also be wrong. But at the same time, I think the recovery over the next 12 months will be on the higher side. I would expect that generally metals as a commodity basket will not be surprised to see a double-digit growth in pricing from here on over the next 12 months.